they don't really have a frame of reference. So it's not like the market has traded here before, and we can say, well, you know what, the market's been up at it was just at $1.99. So fundamentally, there's no reason for it to be up here. Traders really do have to adjust their thinking for the new price levels, but you've also got to realize that most people tend to be bullish. Okay? So that means they tend to think to the upside. In fact, if you think about your own trading and your own approach to the market, you tend to be more optimistic and think that the market can go higher than it is now. And you tend to think that if the market's moving down, it's not really going to go down much further. Okay, that is usually how people and traders in general tend to think. In the bigger numbers. Yes, there are some people that are just always bearish. They're always thinking that the market is going to go down. But the vast majority of traders, the bulk of traders, are going to be optimistic, and they're going to look at the market like it's going to move up more than it already has. Plus, you don't have a lot of consolidation in this area. Okay? You see that the market came up and then down, up and then down. So traders didn't really have a lot of time to think about price in this area. Okay, they didn't have time to adjust. Now, it's my belief that consolidation areas like this big consolidation here represent traders getting used to the idea that the pound is trading at these levels, at 92.40 or 93.70 or even above 9,500. They're getting used to the idea. And the longer they get used to that idea, as long as nothing major happens fundamentally, you put that together with the idea that traders tend to be bullish, that's when you can get these price vacuums. And an easier way of looking at that is you see price vacuums where you don't see consolidation. So if you can draw a box across the market and you see a bunch of movement, the market probably is not going to move through there very quickly. What you're going to see is this, where the market gets in there and it hesitates. You'll see down bars, you'll see days where the market just goes sideways, that sort of thing. And all we have to do is look at this trading here. You can see that the market started to consolidate here, but once it cleared this area, and look at this trading, you had almost 400 pips before the market even took a breather. Okay? But that also was a good indication that the momentum was to the upside. And the market popped up and then started the consolidation process, moving back and forth, starting the sideways action, establishing support zones, which, by the way, the support zone is pretty close to this area here. So if we drew lines across, let me just go ahead and draw this line here, and we'll duplicate that. You can see how roughly, okay, again, this type of thing doesn't have to be exact, but look at this. The market came down here to the top and then spiked right back to the bottom. But look, that area was defined by the one down session in this huge move up. Okay? Now let's see if that area plays into the market going forward. The market comes back down there again. Look at this. Huge momentum to the downside. What happens? The market breaks through. Look at this. Comes right back there. What was once support is now resistance. Look at this day. This one session closed exactly on the level. Okay? Let's just follow this through, do the exercise. Look at this. Support, support. Look at this. The consolidation is formed here by the top end of this one bar here. Now, why did I key in on this one bar? What could possibly go through my head to even look at that? Well, it's because it's the only down bar in this entire move. So for whatever reason, on this one day, there were more sellers than there were buyers. So for one 24-hour period, the sellers came out in force. And they came out in enough force that they stopped the market going up. Now the very next day, of course, the bulls came back and they pushed up. But what does this mean?